Good evening, everyone. Welcome to today's 30th June market debrief. What we are looking at on the screen first is the S&P 500 index, and for the past 1 week, it has continuously making new highs, and this is mainly being pushed by the big tech firms. Okay, so what I mean by the big tech firms, technological companies, is mainly the those that make up the Nasdaq 100 index. You can see that the Nasdaq has made very strong movement on the upside. Okay, so these are mainly being pushed by big companies, your Microsoft, Adobe, Nvidia, such companies. The theme right now is mainly tech. Okay, software as a service, or anything that does not require you to work in a office. So it's like online retail is coming back up. A lot of software, tech software, like those giving services to people, Shopify, Cisco, and all this stuff. Okay, so these are the ones that are running right now in the US market over the past 1 to 2 weeks. Okay, so this is might likely flow over to Singapore and Asian markets. Okay, so this is how it looks like for the US at the moment. Okay, if we look at some of the news that is pushing all this price higher, is mainly a few days ago, roughly being about 5 or 6 days ago or last week, that the Joe Biden infrastructure plan is being unveiled and now being sold to around the world, US, to gain approval. Okay, so what happens is that they are going to authorize about 1.2 trillion of spending. Is down from the previous estimate of 2 trillion, so it's now 1.2 trillion. What we can see is that they are actually going to more into spendings on what we call transportation projects and allocation to digital, disaster, environmental, and energy infrastructure investments. So this to say, right, is that some of the things are mainly like your transportation, analytical analysis of traffic conditions, your EV batteries, tech companies, electric vehicles, and of course all your so-called analysis of disasters, logistic management, and so-called energy. Okay, your battery, or new types of energy. So the money that is going to spend, this 579 billion, right, is going to be spent on this. Okay, so but the very funny thing is that they came out with this thing, that this additional money, right, on infrastructure spending is going to increase the domestic output by 0.1%. Okay, I don't know how big this 0.1%. Okay, it's going to decrease the US debt by 0.9%. Okay, the funniest thing is the timeline, 2050. Now we are in 2021, so it's like 29 years later, then you will start to see this kind of result. So I mean, it's like the kind of rate of return, or return on capital for such a infrastructure spending, right, is, I would say, disastrous. Okay, so but the market is taking it well. Okay, because money is being spent, so private companies is going to make a lot of profit from all these government spendings, and it's going to spread around in the economy. Okay, so we just leave it at that. Okay, so next we'll be looking at is the Federal Reserve balance sheet. 2 weeks ago they mentioned that they are going to taper. Alright, so what we have here on last week data, 22nd June, is that they are still continuously buying more bonds in off market, and their so-called assets in their balance sheet, right, continue to rise higher, meaning to say they are still continuously printing money. Alright, so they are talking about transitory inflation, meaning to say this inflation is because of this pandemic and stimulus, that is going to go off in a while. Okay, but with this kind of spending and money printing happening in the near future, I don't think inflation will go off, or be transitory. Okay, and I mean, this inflation is also had a spillover effect in other countries, like especially in Singapore. In Singapore, we have like today I just top up my petrol, and I got a shock. Instead of paying my normal $87 to $90 after discount, I'm paying like $104, like a 20% rise, in the petrol prices, what I spend. Okay, so inflation is wreaking havoc, not just here in Singapore, but in around the world. Okay, but I think government is like massaging the figures, to keep inflation numbers down, their so-called consumer price index figure down. Okay, so you just have to know it yourself, get the feeling, when you buy your groceries, you pump your petrol, do notice of the price increase, as compared to just last month only. Okay, what we have here is a Hang Seng Index, and Hang Seng Index has been down for the past 3 days, after like another previously 3 days of rally. Okay, so seems to be resting, and I think it might start to turn back up again. This is like you are starting to see continuous new higher low being made, over like here, over here, and then over here is continuously making new higher lows. Okay, the good news is that over here we are seeing the China index making a comeback or rally today. Okay, so this might be leading the our Hong Kong and Shanghai index, to new highs. So hopefully from here you will start to rally back up. Okay, as for our local market, the Straits Time index, we have a very quiet day, and then yesterday we had a big drop. All right, not too sure why. It's mainly being pushed down by the banks, our three banks. Okay, and today we had a rally back up. Looking at the moving average, the short-term 20-day and 50-day moving average is still looking to inch downwards. Okay, you can see the trend here for over the past almost 2 months. It's been trending downwards. We just have to monitor first, okay, and then we see how this will turn out for Singapore. So Singapore is a little bit weak. We are facing a so-called short-term weakness, or mainly we are in a correction phase. Okay, so how long this correction phase will last, I mean, we won't know. Okay, so but looking at the pattern that is making right now, it might still last for another a few more weeks, or a month or two. Okay, so we just have to be patient, and wait for it to recover. Okay, as for our commodities market, nothing much for our commodities. No, the gold prices continue to inch lower. Okay, so for the gold price, you will have to wait for a while. Okay, it seems to be like in a big so-called retracement or big correction, after a strong 2 months rally. Okay, so we just have to wait. So now the only strong commodities left is the crude oil. Okay, so the crude oil price has been trending sideways, and you have heard me mention just now that our pump prices has increased. Okay, so I believe this crude oil price, right, in the short term or near term, is still going to continue to move up strongly. All right, so do watch out for crude oil. So those oil related companies, like your Sinopec, Rex, and all these, Keppel Corp, you could also watch out for them if you're trading short term. The other strong commodity market is the steel price. Okay, so the steel price futures, like yesterday or something, it had a gap up. If you can see over here. Alright, it has a gap up, also called it limit up. So it's making like new highs if you compare it to a long period of time. Okay, so you can see this steel prices has been on a rocket move upwards, from 600 to 1008. It's like up 300%. Okay, so I do not know what is causing this. What I would say is benefiting China. Okay, since China is the one of the biggest steel manufacturer in the world. Okay, so what are the stocks we should be looking out or watching out? So last week I've mentioned about the tech companies, chip manufacturers. Okay, so I'm going to continue with that. This is UMS. So last week I've mentioned about UMS here about this rally move, this up move, and today it has continued to make new highs. All right, so you can watch out for this. No look for any pullback. So this is uptrending. Okay, this is AEM. Only after almost 1 week of rest, it started to make new highs today. Okay, so you can still watch out for this. Still can trade. This is Franken. Okay, so Franken, after my last debrief, it basically trade up higher again. Okay, trade up higher and then rested for a week. All right, so this is Franken. All are moving very strongly. And stock in Hong Kong, see this is Sunny Optical. Those continue to trend upwards higher. And some of the tech companies that I've talked about or mentioned before. This is JD.com. Okay, so last week I've mentioned here, I'm saying that it's most likely going to turn upwards, and it has a strong rally for almost a week. Okay, so this looks like a turnaround for this JD.com. And another online retailer and logistic player, this is Meituan. Okay, so it rallied for 2 days and then rested sideways for 3 days. So I would say this 3 days rest is still okay, on lower volume. All right, so we are hopefully looking to see it continue its rally upwards to the 400 plus area. And last but not least is this Alibaba. Alibaba here, I've mentioned about this Alibaba over here last week. Okay, and it has rallied strongly for a week, breaking above so-called its 1 month high. Okay, so I'm gonna talk about Alibaba for a little while. All right. Firstly, Alibaba has dropped like I would say 40%, from its recent high. Okay, so Alibaba has dropped like 35% from its its recent all-time high prices. Okay, so if we look at the whole history of Alibaba, right, Alibaba is still on a strong long-term uptrend. Okay, so after this low, right, it has made a new high. Okay, over here, and thereafter it has did a small little correction and make a new higher low here. All right, and then it did a higher high here. Okay, and then it did a higher low here, and the most recent all-time high at 300 plus, it made a new higher high. And at this moment of time, at this about 205 area, right, it made a higher low. All right, so in terms of chart pattern, technical analysis, this is still on a up very long term uptrending movement. Okay, so what gives strength in this uptrend? Okay, so we will want to look at this track record in its fundamental analysis. Okay, so I siphon out the data and just hopefully can let you see how Alibaba has been performing over the past 10 years or so. Okay, so you can see that its outstanding shares has been it does not increase that much. All right, it's been quite flat now over the period. And its revenue, you can see that it has been revenue has been increasing tremendously. All right, so to put it more into perspective, I've put into a revenue per share kind of thing. So it's like when it first started to do its IPO, it was making like $15 per share, or more like $15,000 per share. All right, and it has grown to right now about 264. So if we talk about revenue per share growth, it has been constantly growing at more than 30% in terms of their revenue over the years. And hopefully they can continue to do so in more years to come. All right. And if we look at their so-called earnings per share, it's been also increasing. All right. And its P ratio, what we see here is one of its lowest. okay, at $24 per earnings, all right, per dollar of earnings. So it's a multiple of 24 times. Okay, so over the period where it's been running, right, it's been like PE 40, PE 50, and right now is at 24. So I would say it's on the low side, especially compared to the S&P 500. I think S&P 500 right now is running at a PE of 32, and then we compare it to, like, let's say Amazon, which have a PE of about 80 or 80 to 90, Tesla at about 1000. Okay, so I would say Alibaba right now is on a relatively cheap price, and compared to and why it's being depressed is mainly because of a lot of this talk by the last time the Trump administration. They want to ban China companies, that's linked to the China military. Then there's China crackdown on Jack Ma. Okay, even though Jack Ma is no longer the CEO or chairman at Alibaba anymore, although he is the founder and he has a huge stake in it, but I think he does not have that much of a control in the company anymore. Okay, so looking forward, I believe the company will probably shake that off, and then it will start to turn back up. Okay, and especially if their revenue and so-called this free cash flow continues to rise up. Okay, you can see its book value is also rising. Okay, very well with 20-30%, with a return of equity more than 15% per year. Okay, so and its free cash flow has been growing, like 200 over million dollars a year. uh, I would say that is incredible, running for 10 years, and hopefully if they can continue to show such results, no doubt I think the share price will continue to make new highs, meaning to say it will break its previous price, new high price of 300 plus. Okay, so I would say give it time. Okay, so I just like to show one stock, a week, to show you what are the stocks to look out for. And the reason why I draw this data out is mainly there's this understanding of what really earning power is. Okay, the earning power of a company is mainly what kind of product that you put in the company's hand or in the CEO's or the management's hands, and what kind of returns that they can give you. This is term it as their earnings power. So it's usually look at like how much of the earnings growth, revenue growth that they push the company, their rate of return, their book value growth, and of course their return on capital and cash flow growth. Okay, so these are the main factors that determine how strong the earnings power of a company is. And I would say Alibaba has quite a strong earnings power with if we look at their so-called company profile, we have here our Alibaba group, and also just to let you guys know, Alibaba run quite a lot of businesses. You have your Taobao, Tmall, your for our local you have Lazada, AliExpress, Youku in terms of media, TikTok, Alimama, Alibaba Cloud, Cainiao, and not to mention they also have their so-called N Financial, that deals in small loans, financial services. Okay, so they are growing in terms of I would say in a similar route compared to Amazon. Okay, so Amazon in the US and you have Alibaba in the East. All right, so these two are a real big giant in this field, and they are creating an ecosystem for their whole business. Okay, for B2B and a B2C business. All right, so you so at this moment I would say Alibaba, being at this price, probably a PE ratio like 25, 26, 27, I would say it's still a buy. Okay, you still can buy into that. If we look at the statistics, okay, currently right now, yes, the P ratio has already raised to 28. Okay, so P ratio basically is what the market determines, the demand for their share. So that's all for today. Hope to see you guys next week.